Hey folks, Dan Frio here, the rate update. Today is September 3rd, 2021. Happy Friday, folks. The jobs number came in not good, and I don't have much good news today. So hopefully you'll come back and check out what's going on with the jobs report, what's going on with mortgage rates. I got some good news on student loan debt, and I got really bad news on rents, on how rents they're expecting to go up this year, next year, and continue to 2023 at a rapid pace. So that's what we're going to discuss and more. So don't go away. We'll be right back. Okay, so let's try to consolidate all this in as quick as a time frame that I can possibly get. So here's the breaking news on the unemployment numbers.
Yes, the jobs report is out. August non-farm payrolls increase a minuscule 235,000. 235,000. You heard me right. And if you look at private payrolls, they were up 243,000. Change in manufacturing up 37,000. The unemployment rate had a drop of 0.2% to 5.2, a post-COVID low.
So based on this employment number, what do you think the Fed's going to do?
Well, I think that number is very sad in terms of the real economy, but in some ways it makes for a field day for Fed watchers, because now the focus will be on the buildup not just to the September 22nd announcement as to whether the Fed will begin tapering. It could be now November 3rd or December 15th. And so for the army of financial analysts who spend each day trying to guess whether the Fed is satisfied on the substantial further progress metric that they've established for deciding whether or not to taper their 120 billion in monthly purchases of government-backed debt, this is more grist for the mill.
Well, that wasn't good news. So the expectation is mortgage rates should actually do well. Why? Because the Federal Reserve probably isn't going to taper now till maybe the end of the year, if not the Q1 of 2022. Who called that one? Okay. All right. So now let's get to the headline news. So we go first to what I just showed you. Breaking news by Rick Santelli, does a great job there. What's happening to the stock market? Well, it's taking a dump right now. Dips after the big report. I'm not quite sure why all this is happening. I'll explain that a little bit here at the end of this. But one of the things I keep telling you guys is, because why is there so much spending in the economy? And this report came out today. It says, it was a headline, I just figured I'd throw it up there. Student loan borrowers have 4 more months without payments. So remember when I always say, why I think inflation or prices are a little out of hand right now, and why I don't think people are buying houses or putting their houses on the market. I retract that, putting houses on the market. I always say, and every day I say this, forbearances. That's why people aren't putting their house on the market. Is it coming? You betcha it's coming. Okay. Another reason why we have inflation running out of whack. If you have the forbearance program and you don't have to make a mortgage payment, you don't have to make a student loan payment. What's the 2 biggest debts you have in your whole life? Housing, student loan debt. Okay, if you don't have those to pay for a year, and you're one of the people that wasn't really affected by COVID, you're in a great financial position right now. When all that ends, you're going to go back to normal, okay? And that's why I keep saying, guys, let's wait till maybe October, November, December, or the first quarter of Q 2022 before we really start to knee-jerk. What I try to inform you guys every day is what my expectations are in the housing market. Am I a buyer? Would I refinance? What I'm expecting with the real estate business and where mortgage rates are going, because every little dime we can save you. If you're looking to refinance, our goal is to save you as much money as we can. We also help you with your insurance. We have an insurance broker on staff. They actually save me $2,000 a year on my bundled insurance. So I'll have a caption of that down below. But I'm not here to sell you all that stuff. I'm here to educate you guys on what's going on in the market. So the next thing we go to is this. Okay, rents. Rents are getting out of control. All right, rent inflation is about to surge forth, and it won't stop, two Fed analysts say. So let's look at the backdrop. Is it a good time to buy? Maybe not today, maybe not tomorrow, maybe not next month. Starting November, December, January, I'm going to say you're going to be in the catbird seat if you're able to buy during that time or look. Why? Is because the forbearances are going to end or ending. Student loans forgiveness is ending. People are going to put their houses on the market that can't afford it. There's going to be, I'm expecting about 800,000 new homes on the market within the next 4 months. Guys, you can disagree, agree with me, whatever. Post your comments down below. I try to answer every one of them personally. Okay, that's what I do. But let's say I don't want to buy. I'm going to keep renting. Well, if your rent's going up 6, 8, 10% a year, how much longer is it going to take for you to exceed what a mortgage payment would be? Now, on another note, I did a video a couple months ago where I analyzed our last 10 purchases of people renting. I can say 90% of those clients had lower mortgage payments than they were paying in rent. Okay, so even if mortgage rates go up a little bit, is it still going to exceed what you're going to pay in rentals? So let's say for the next 2, 3, 4 years, rent payments go up 6% a year. Where's your rent payment going to be 2 years from now? Just a food for thought. Okay, so let's now go to what's going on in the MBS market. So somebody commented, they're like, Dan, you're all over the board. You're talking 102.5, 107.8. What does all this mean? And it doesn't mean anything to any of us. Well, I hate to be contrary to that, but I have, we're closing in on 16,000 subscribers, and we're just shy of 1.5 million views. And 99% of the people are actually giving me a thumbs up. So thank you guys out there for that. So let me explain to those newbies out there that are just catching my video, maybe for the first or second time, you don't really understand what we're talking about here. So I try to caption what my expectations are in the real estate market, inventory, and things like that. I'll have some specials next week on down payment assistance because there's a lot of people out there that are looking to buy that just might not have the money as a down payment. We have multiple programs that will give you up to $10,000 to use as your down payment as a grant. But let's get on to this. What is this chart? So let me kind of micro this without boring you to death. What are the components, or what makes up your mortgage rate? Well, the biggest thing is what's happening with the mortgage-backed security, this bond, okay? Because the yield on this bond is the biggest component of your mortgage rate, okay? So that's why we watch this, all right? This number here represents what's happening to the price, not the yield, the price of the bond, okay? So let me give you just a little bit of insight into how bonds work. How bonds work is the higher the price you pay for the bond, the lower the yield. And if it's a mortgage-backed security bond, the lower the mortgage rate. Let me explain how this works. So let's say this bond is going to mature next year, okay? So let me show you how the price affects the yield. All right, so this bond matures next year. And at maturity, I'm going to get $100, okay? So today, I'm going to make this extreme. Today, I give you $100, a high price for that bond. Next year, you give me $100 back. What is my rate of return? What is my yield on that? It's zero. Basically, I'm giving you $100 and getting $100 back, zero. So now let's have the price drop, okay? Now I pay you $50 for that bond today. Next year, you give me $100 back. What was my yield or my rate of return? 100%. I doubled my money. So do you see that in that case, the mortgage rate would be 100%. When I paid $100 and I got $100 back, my mortgage rate would be zero. So you see how as the price goes down, the yield goes up. That's its simplest term. So there's an inverse relationship. So we love when the prices go up because it's pushing down yields. Now, I didn't knee jerk this morning because I'm like, this is really odd how the numbers came in terribly, But mortgage-backed securities, the rates are going up. Okay, so let me explain to why this is odd. And if you follow me every day, you get it. But if you don't get it. What the Federal Reserve is doing is they're jumping in and they're buying up this mortgage bond. They're buying in the tune of 40 billion plus a month. Okay, when you start hearing, and if you haven't, start paying attention to this. When they say the Fed is going to start to taper, okay, that means they're going to start pulling back how much they're buying. Okay, so if we have the Fed just jumping in buying bonds, 40 billion, they're driving up the demand. Okay, the supply is pretty much finite. So the more demand you have on there and they're buying like crazy, it's pushing up the prices. Okay, what tapering means, they're going to pull back on how much they're buying. So if you start buying less of a widget or a product or anything, it's going to cause the price to start dropping. So do you get it? As the Fed tapers, there's not going to be as much buying in this bond. So it's going to cause the price to go down until more and more people like that price and start to buy, and it's going to cause rates to go up. Okay, so that's explaining what's going on. So when today came in and the Federal Reserve, their basic concern right now is employment. They want 1 million plus people employed every month for 3 or 4 months before they start to taper. So we get numbers today at 250,000 or whatever, far short of the million that we need, or the Fed is looking at to start tapering. So if you look at this number, you're going to say, well, the Fed ain't tapering anytime soon. I'd have to agree with it. And I've been agreeing on this ever since. I say they're not going to taper until Q1 of 2022. And I have a lot of people combating that, but feel free to comment down below. I'd love to hear your comments. So now we have this number come out. So the Fed's going to probably come out and say, well, we're going to kick the can even further down the road. So my expectations were that mortgage rates were going to get a little bit better. But let's look at the micro numbers on this so I can explain a little bit further. You can see that we're down 8, okay? I still don't understand why we're down, but let's look at intraday. Let's look where we are for the whole day. We came out of the gate and just crashed, okay? We are up from the bottom right here. So if you look at this, it says 101.25. I'm just giving you those as reference points. Like if you're trying to score a touchdown, you're on the 10-yard line. I'll tell you, you're on the 10-yard line. So that's where I want to say our start point is right here. At 9 o'clock, we were at a 101.25. From 9 o'clock to now, we went up 10, 12 basis points, 12 ticks here. So we were minus 18 not too long ago. Now we're only minus 6. So we're coming back. I expect us to come all the way back to here. So I have people saying, Dan, are you locking? No, I'm not locking. There was an alert to lock yesterday from a lot of analysts. I didn't lock. I didn't advise any of my team to lock. Why? Is I expected this number today to be bad and mortgage-backed securities or the MBS market actually to rally and not go backwards. I missed that call, but I think by the end of the day, or at least Monday, Tuesday, we're going to be back to square one again, meaning all the way back here. Why today is a little bit volatile? It's a long weekend. There's a lot of people probably off on Wall Street, investors and so forth that are buying bonds. They might have stepped in and just dumped this morning and said, screw it, I'm going away for the weekend. I'll worry about this on Tuesday. And that's what I see. So I'm expecting by next week, Tuesday, Wednesday-ish, we'll be back to square one again, if not even better mortgage rates than where we are. So that's today's report. I've been trying to do it. Some people were asking, Dan, make it a little quicker, make it a little more informative and get directly to the point. Try to post a little bit earlier so we can watch it. So I'm doing that. I don't have mortgage rates for today. I don't really think they're going to change much at all. We're going to wait till about Tuesday or Wednesday to come back on that, but I'll be posting rates again on Tuesday for you guys. So that's it. If you like what I'm doing, please, I ask you 3 things. Give me a thumbs up, please. Subscribe down below, hit the bell every time I post a video, you get an alert. If you're looking to build, if you're looking to buy, if you're looking to refinance, cash out, do some home improvements, remodel your basement. If you're in a forbearance and you need an exit strategy and you don't have one and you're like, I don't really need I don't know what I'm doing here. Call us. It's not a hard sale. We'll consult with you. We'll give you all your options. And then I always say, you know what? Think about it. Especially this weekend. You got a long weekend. Think about it. Let us know on Tuesday what you want to do, or Wednesday. There's no pressure on our end. It's up to you guys. But the faster you do it, maybe the more money you can save and get a lot of debt off your load. Or if you're looking to buy a house, maybe you can reach out to us. We get you pre-approved over the weekend so you guys can go look at some homes over this long weekend. So how do you find more about me and my team? We'll go to therateupdate.com. You're going to go right here. What I ask you to do, don't apply online. You can if you want. It'll come to me. We'll work on it as soon as I get it. But we want to talk to you guys. What are you looking to do? What are your goals? You want to buy a house. Okay, there's a lot more to it. How much payment? What kind of payment are you looking for? How can we help you look for that house? How can we put you into the right program to make sure you have the right program at the lowest rate, the lowest fee structure, all this stuff. If you're in forbearance, we can guide you through that. If you just want a cash out refinance, remodel your house, we can consult you all the way from start to finish. So how to do that? Give us a call. 844-775-LOAN. It's the best way to get there. Or if you really have a tough time getting us during the day, schedule an appointment. You just click this button right here, schedule a meeting. What we'll do is it'll give you a chart or a calendar. You pick the day and time that's available to you. Let us know if you want to do it by phone or by Zoom. And then on that day, at that time, you'll be hearing from us to answer any and all questions that you got. So thank you so much, guys, for watching. Have a great weekend. God bless. Be safe. And I'll see you next week. Bye-bye.